Take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA look at the market, how we analyze the markets. This is Rod from BTA, and we are known as the middle traders. We're picking it up on part 2 of the FAANGMT. Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. And like we said before, we can't see how the market is going to go up if FAANGMT cannot. Okay? So if FAANGMT can't go up, I don't see how the market is. When these stocks make up such a huge percentage of the overall market indexes. All right, so this is the daily chart of Apple. Okay? This is a daily chart of Apple. And what you're looking at here is our key moving averages. You know, the 5-day moving average is the white, the green moving average is the 9-day, the yellow is the 21-day. So right now, Apple did make a lower low, and we looked at that as a possible double bottom, right? And it tried to rally, okay, but it's starting now to pull back, all right? But it's stuck below a downward trend into sideways 21-day moving average, right? Well, we all know Apple had some little bad news, came out with some bad news recently, talking about some slowing in sales and different things of that nature, supply chain issues, okay, what have you, whatever. We're going to have a whole bunch of reasons. But at the end of the day, the overall market is a correction. Apple is trading below its 200-day moving average right here, below its 150-day moving average right here, and look at the downward trending 50-day moving average right here. So we're below the 200-day moving average. Whatever the reason they want to tell you, they're always going to come up with a reason why something is going wrong. I don't care. The chart is telling me everything I need to know. The stock is in trouble. It's not doing that well. It's below the 200-day. It's below the 150-day royal blue line, and it's definitely below this downward trending 50-day moving average. And it's stuck below the 21-day moving average. So this stock is in trouble. We have to see it firm up a little bit, start consolidating. I would like to see it move a little sideways like how Facebook was doing. We just looked at Facebook first. I would like to see it move a little sideways. But right now, this Apple is clearly moving down. But let's look at it on the structural chart because it has some things going for it on the structural chart that looks a little better. Okay? So let's look at it on the structural chart here. All right. Here we go. Let's bring up the structural chart with our support and resistance levels and our trend lines, right? So here we go. Let's expand this so we can see it. Okay, let me bring this up a little bit. And let's try to zoom in just a little bit here. Look at this action here. Okay, well, you see we got this internal trend line right here. This internal trend line going across the internal fractals. But we have some overhead resistance, horizontal resistance levels that Apple has traded up to when it came off of these bottoms here, which we consider like a little double bottom. Let me just draw that out a little bit. See that little double bottom right there? And this was the center, the middle point of the double bottom. So this would have been the pivot, okay? Where Apple traded right up to it. And then it got above the pivot area, which was actually a weekly fractal, a weekly overhead resistance level, a longer term weekly overhead resistance level on the weekly chart, okay, which was right here. This red line is representing that overhead resistance level on the weekly chart. We got above that, and we got above this internal downward trending trend line, but we found resistance at this daily fractal level, this daily overhead resistance that's at a fractal going back from earlier this year and late last year. Okay, so we found resistance there, and then it pulled back. and now it's back below the pivot point, the center of the double bottom. It's back below that now. All right. So Apple actually, it could mess around and try to develop some form of inverted head and shoulders pattern, sloppy one, but it's possible. All right. And the neckline will be right across here. All right. So when it breaks above this line right here, then that'll be the pivot right here. Okay. Well, that's a little sloppy, but it's possible. All right. But at the end of the day, we have a lot of overhead resistance. We back below this downward trend and internal trend line. And if we get rejected here and break back below this prior long-term resistance area, which is now to act as support at 145.90, if we get rejected at this trend line, break back below that, we can start coming back down here and test some of these lows. And then just maybe, prices will firm up a better looking head and shoulders pattern. So if we come back down here and kind of trade around this level and then head back up, well, look, that will form a little better looking head and shoulders pattern, and the neckline will still be right across here. All right. So, or you could go maybe early entry right at the center, the middle area of the prior double bottom formation. So that's what we're looking at. So Apple is trading below its 200-day moving average, trading below the key longer term moving average, 150-day, 50-day, 21-day. All right. But for structurally, it still has a lot of work to do, right? Structurally, it still has a lot of work to do. So we need to see Apple, along with Facebook and these guys, to start looking a lot better. But it may be some opportunity here at some point in the time when the sell-off finishes. Okay, it may be some opportunity here. And look, here's our relative strength index. And look, we got to get back above 50. Okay, get above this 50 level right here, this dashed horizontal line right across the middle. We got to get above 50 before we can really start saying that, anything really constructive is happening, because that would tell us that it's on the right side of the 50-yard line, and maybe that the buyers are starting to take control of some of the momentum. We need to get back above this horizontal dash horizontal line that represents the 50 level. Okay, we haven't been able to get above that pretty much since around April. Okay, when we fell below it. All right. So that's what we're looking at. That's what we have to keep an eye on. So it could be some opportunity. Well, if the market is to rally, these stocks are going to come off their lows. Believe me, it has to, because they represent such a big portion of the overall market. It's not rocket science. It's not rocket science, y'all. It's not. I'm not that smart of a guy. It's just common sense, really. Okay, these stocks represent 30 and 40 and 50% of the overall market. So if the overall market goes up, they represent such a big portion of it, they have to go up. All right. So here's, unless that individually they got some major issues individually, but the majority of them going to go up. Okay. So here, this is the red line. This is our directional movement index, the ADX. And this is our red line that's representing the sellers, the green line representing the buyers, and the yellow line representing the trend, whether we have a trend or not. Well, as you can see, the sellers are starting to lose control. It's trending down. They still got control because they're above the green. But the buyers are also losing some control. They're not really taking over control because they're still trending down. And the yellow line would represent the trend. It's telling you that there's no trend. It's almost below 20, which is represented by this dashed yellow line right here. Okay, it's at 20.85. So in other words, nobody has really taken full control. It's still leaning toward the sellers because the red line is above the green and the trend and the stock is moving down. But the downward trend is starting to slow. Okay, when the downward trend was really picking up steam, you notice that the yellow line is going to be rising. That's telling you that whatever direction the stock is going in, that is starting to pick up a trend and really move in that direction. Okay. Well, right now, the yellow line is starting to point down. So this downward movement, okay, is starting to lose some of its momentum to the downside and lose some of its trending potential. All right, it's below. It's starting to get below 20. So Apple is in a position here where it could be some opportunity at some point in the future. We just had to keep an eye on it. I mean, I would not overlook these stocks. I did a video once before and said why we like Microsoft better than Apple. Okay, but Apple is still earning money. It's not a complete dog. It's still earning money. So I would keep an eye on it. Okay, but now let's look at the on-balance volume, and as you can see, the volume is not really coming in on the on-balance volume. Okay, so and you've seen the volume bars on Apple. Here's the on-balance volume, the yellow line, and as you can see, the volume is still below here. It's still below this prior high right here, and that was a key area. It was once resistance, support. Look back here is resistance. So this area, this high on the on-balance volume, is not a bad area. As you can see, prices has fluctuated right around this area quite often. Okay, so it's not a bad level. All right. Well, the on-balance volume is not breaking back above that high, which is not a bad level. Okay, it hasn't breaking back above that, so the volume is not really coming in that great. But we saw that with the volume bars. Now the on-balance volume line is confirming that. Okay, so it's really no trend. Nobody's taking control. It's trying to develop a base pattern. Okay, it's trying to develop some form of some type of base pattern, whether it's a double bottom or pulling back into a inverted upside down head and shoulders. Okay, it's trying to develop something here, or whether it's a sloppy double bottom with the pivot here. But either way, the pivot is right around that $150. Okay, all right, and we need to get above that downward trending internal trend line. So Apple is trying to firm up something, but if the overall market completely rolls over, if and when we go into a complete recession, well, Apple is going to suffer like everybody else. Okay, it's going to suffer like everybody else. But when this market is to rally, these stocks are going to have to try to come back. Okay, well, let's look at Apple now on the weekly chart. All right, let's look at it on the weekly chart, and it's not that great of a picture. Okay, it's not that great of a picture, but when it comes out of this, it could be powerful at one point in the future. It could be powerful. Okay, let's look at the weekly moving averages, and as you can see, the main thing here is that we're below. Okay, we're below the 8 week for the immediate term. We're below the 8 week. Okay, that's not good. Well, we're holding right here at the 100 week. That's good. Okay, if we can hold support at the 100 week moving average, that would be great. Apple doesn't normally break that. Okay, let me reduce this a little bit. And see if I can bring this in to show it to you. Apple doesn't really break that 100 week moving average. Okay, I'm making this really small so you can see how powerful that 100 week moving average is. I'm going all the way back to 2020. Okay, here was back in 2018. So back here in 2018, we broke below this 100 week moving average right over here. Okay, we did it again over here like in 2019. Okay, in the mid 2019. Look here, we did it again here in 2020. But we don't break that often. We touched it and broke it right here with this sell-off in 2022. Okay, but this 100-week moving average is key. Well, down here we got the 200-week moving average. We only touched that back here in 2018. Okay, so right now that 100-week moving average on Apple is key. It's still holding support. Prices are trading right above it. Price right now is 148. This 100-week moving average is at 139.71. So prices are trading right above it. But this brown line here represents the 50-week moving average, okay? And this blue line represents the 40. Now let's go back and zoom in on that so you can see that. Let's go back now and let's zoom out and expand this a little bit so you can see these prices a little better. Okay? Let's see these prices a little better now. Let me bring this down. Okay, so we can see the recent price action really well. And let's zoom in. Let's zoom in right here. Okay, so look, we got that 100-week moving average. We just spoke about it. It's right here. Okay, we got this horizontal support level at 137.98, just below this 100-week moving average, right? But this is the brown line I was telling you about. That is the 50-week moving average. This crayon line is the 40. This royal blue line is the 30-week moving average. So we got the 100-week moving average right here acting as support, but we're below the 50, the 40, and the 30-week moving averages. That is a lot of overhead resistance, okay? A lot. So if we get above this downward trending 8-week moving average, that's the immediate problem, to get above that and get above that 150 level we just saw earlier on the daily chart, right? But then you're coming right into a lot of this overhead resistance, really, really strong overhead, long-term key moving averages. And that's right around 156, 157, 159. Problems. As Bob Bittor used to say. We got problems. Okay, not problems. He get excited and say problems. Okay, well, if we get above that, we got to look at this overhead resistance right here. It could get rejected. But if we break above this, that is very constructive. Okay, so we know what we have to look at for Apple. All right, we're going to be updating this thing constantly. We're going to keep our eye on Apple and all the FAANGMTs, constantly updating these charts and looking at where the prices are at. So here's that 150 level I talked about on the daily chart. You can see it also. Here it is, the long-term resistance area here. You can see it on the weekly chart right here. We have our red lines on the daily chart. So, bring it down from the weekly so we don't forget anything, okay? But you can see it's right here on the weekly chart, okay? It's right here on the weekly chart. And that 150 level is the overhead resistance right here for Apple right now. This red horizontal line, prior fractals going back to 2020, 21, and 20. Well, here it is right here, fractal here. This red horizontal long-term weekly resistance area is pretty strong, okay? Well, we need to get above that 150. Of course, that's going to help us get above that 8-week. We break above this trend line here. Then now we're going to start coming into that overhead resistance of that 50-week, that 40-week, and that 30-week. That's all coming together right around here in the 160s. So we got a lot of overhead resistance. Look, this thing can bump its head and get rejected at any moment. I'm telling you, it's a lot of pressure on the overall market, okay? And we told you it's a cloud of brewing, as my mother used to say. Look at the video where there's a cloud overhead, okay? Is it a rain cloud or is it a hurricane, like Jamie Dimon said? I don't know, but we're watching the charts, and the charts are going to tell us, okay? The charts are going to tell us. Let's look at our SW chart real quick. And as you can see, I'm just going to make this really fast, okay? Those are some of the same weekly levels up top. But what I really want to talk about right here on this chart is the underperformance, okay? Is the underperformance. Look at the relative strength line now. The relative strength line. Apple can barely get any overperformance. It's underperforming the Standard & Poor's. Compared to the Standard & Poor's, Apple is doing worse than the Standard & Poor's, okay? And look at that on-balance volume line on the weekly chart now. We looked at the daily chart. Look at the on-balance volume line on the weekly chart. So on the longer-term weekly level, the volume is just coming clean out, okay? So that's what I really want to show you on this chart. Up top, I just still have some of our structural levels up there. Well, we already looked at the 150 level, okay? We already looked at that. But I have some other fractals up here that I'm keeping an eye on, okay? Going way back to 2020. So some of these fractal levels up top. But right here, what I really wanted to show you was just the fact that the Apple, it can't really seem to outperform, okay, since we had the sell-off, all right? It finally fell apart. Right in this area is underperforming, can't really seem to outperform. But also since the sell-off, look at the volume. Look at the volume, completely out, okay? We need to see this volume turn around. Apple starts to outperform the Standard & Poor's 500. And then look at the volume bars, okay? The volume bars are showing us that there is really no volume coming in, okay? So the large institutional investors are not really buying Apple as of yet. When they start buying, they cannot hide from the volume. They can't hide from the volume. They just can't do it, okay? We will see them when they start to buy, okay? And how we say it, we see you, okay? Mr. Institutional Investor, you can't get away from us, all right? We're watching everything moving, okay? Everything moving. Now, let's look at Apple. Let's look at Apple on our structural chart here. This is our chart of lowest. I'm sorry, not our structural chart. I'm sorry. This is our daily chart of lowest. I want to look at Apple for lowest. I want to see what Lois got to say about Apple, because she's going to tell us if we got the launch of a new upswing, okay? So we're going to watch Lois, okay, and she's going to let us know when things are getting brighter for Apple, okay? Well, look, this yellow line right here, this horizontal yellow line, is pretty much right around the 150. It's 149.77, okay? But that's pretty much our 150 level, our overhead resistance, the middle of the double bottom, the middle of the possible head and shoulders, inverted head and shoulders. Let's do that a little better. That was terrible. That was terrible. Let's do that a little better. Here is the possible inverted head and shoulders if prices pull back and start rallying. Or we have our straight up double bottom, okay, with the center point of the middle point being right here. Another little fractal right here. Okay, but at the end of the day, Lois right now is telling us that prices are in a immediate downswing, because you see the red line of Lois above Apple's price. Not good, Apple. Not good at all. At least Facebook was above it for right now. Choppy sideways, but at least it was above it. Well, Apple here is testing the 21-day moving average. Got rejected at this horizontal resistance area. And Lois has turned red. It's above price. So can Apple get back above Lois? Well, that's to be seen. It may today, tomorrow, next week. Who knows? But for right now, it got to get back above Lois. We got to see that blue line come back below price. And then we need to see it break above the center of the pattern, possible pattern that is forming either the double bottom or the inverted head and shoulders, and get above that center area. And then Lois turn blue, start moving back below price, start getting above these downward trend lines, and start testing some of those moving averages that we looked at. So for the market to start really moving, I'm telling you, I really do believe that some of these major FAANGMT, these major mega cap stocks, are going to have to start doing a lot better. They will have to start doing better. I just don't see how the overall market can do what it needs to do if the major big mega cap stocks can't seem to get going. And here is the guppy, all right, for Apple. All right, it's a guppy. And look at the magenta line of closing prices. It's just getting above the faster, shorter term green moving averages, but we still got a lot of overhead resistance, the longer term red moving averages that is going to have to get through, okay, in order to really move upward. So the guppy is telling us, well, we're starting to get above the shorter term moving averages, but we're coming up against these longer term red downward trending moving averages that Apple is going to have to get above. But let's keep an eye on all of them. This, we're just starting now to look at it, right? I'm just bringing it to y'all attention. If the market is to rally and get some legs, if this follow through is to survive, and if we are to go back to the highs, all-time highs, or the high of the inverted yield curve, then some of these FAANGMT stocks, Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla, they are going to have to firm up and start moving. They will. They are going to when the market starts to go. Maybe one or two of them might not because of some individual problems at the company. But for the most part, these stocks are going to go. All right. So look out for part 2. We're going to look at Amazon. Then we're going to move on to Microsoft, Netflix, Google, Tesla, until we finish the FAANGMTs. Okay, see y'all in the next video.